Hey everyone, today let's talk about the silent ways your money just seems to vanish. We're not talking about the big stuff like buying a house. No, we're diving into the small, almost invisible habits that can seriously sabotage your financial future without you even realizing it. Let's get right into it. Okay, I'm going to start with a question that probably sounds completely absurd. Could that simple $5 coffee you grab on your way to work actually be $1 million decision? I know, it sounds crazy, but trust me, the math might just blow your mind. So let's break it down. That daily $5 adds up to over $1,800 a year, which, is a good chunk of change, but it's not going to change your life. But here's where the real magic happens. What if you invested that money instead? Just look at these numbers. The growth starts off kind of slow, but thanks to the incredible power of compounding, it just becomes explosive over time, especially in those later years. And there it is, the jaw-dropping number. After 45 years, if you managed a 10% annual return, which, by the way, is right in line with historical stock market averages, that daily habit has a future value of over $1.3 million. That is the potential wealth just silently drained away, one latte at a time. This whole idea hinges on a super powerful financial principle, opportunity cost. It's basically the unseen price tag on every single thing you buy. The real cost of that coffee isn't just the $5 you hand over. It's the potential growth, the financial security, and the freedom you're trading for it. It's what that money could have become. So that daily leak is just one piece of the puzzle. Now let's talk about the automated monthly drain. I'm talking about this modern problem of death by 1,000 subscriptions. We are all living with what I call the subscription paradox. A $15 monthly fee for a streaming service? It feels like nothing, right? It's psychologically so easy to just click yes. But that's the point. These small recurring payments are designed to be frictionless, automatically pulling money from your account before you even have to think about it. And here's where you can really see the damage add up. That small $50 a month you're spending on various subscriptions, well, that's $600 a year. And over a decade, that's $6,000 gone. And get this chart doesn't even factor in the investment growth you lost on. It is a huge, silent wealth killer. We call these ghost subscriptions, and they are built on the auto-renewal trap. Companies are literally banking on you forgetting you ever signed up for that free trial. So you have to ask yourself, how many of these are haunting your bank account right now, just quietly siphoning off your money month after month? So, we've covered how we spend, from the daily coffee to the monthly subscriptions. But now let's zoom out and look at why we spend. Because a massive driver of our financial choices today is the intense, nonstop pressure of social comparison. This quote here, I know, it sounds a bit academic, but it absolutely nails it. What it's really saying is that we buy things not just for what they do, but for the costly signals they send. That's a fancy term for showing off your status. A luxury logo on a bag isn't just a design, it's a public announcement about how much money you supposedly have. And social media has basically weaponized this human instinct. We are drowning in the highlight reels of everyone else's life. This creates this huge gap between the perfect curated lives we see online and the actual financial reality for most of us, and it throws us right into what's called the comparison trap. This constant pressure creates three really powerful spending triggers. First, you've got FOMO, the fear of missing out, that pushes us to buy plane tickets and concert tickets we can't really afford. Second, those impulse triggers, like limited time offers, that are designed to completely bypass our rational brain. And finally, we willingly pay the brand tax. That's the insane premium you pay for a product just because of the logo that signals your status. All right, so far we've mostly talked about the small daily leaks, but what about the big purchases? This is where a single bad decision can have an even more devastating long-term impact on your finances. Let's just consider the hidden costs of modern tech. Today's cars are incredible, but they are also wildly expensive to fix. Replacing an advanced LED lighting isn't like swapping a bulb anymore. It can cost $3,000. A crack in that beautiful dashboard display? Yeah, that could be a $7,000 repair you never, ever saw coming. And it's the exact same story with the constant upgrade cycle for our electronics. Just look at this. Simply choosing to upgrade your smartphone every 4 years instead of every single year can save you over $2,000 in a decade. That's real tangible money that you could be putting towards your actual financial goals. But the biggest, most dangerous pitfall of all is debt. Specifically, the minimum payment trap. Just look at this example. Using the national average credit card debt, if you only make the minimum payments, you'll be stuck in debt for over 17 years, and you'll end up paying more in interest, over $7,000, than the original amount you actually borrowed. It's insane. You're basically just renting your debt forever. Okay, that was a lot. I know. But the great thing about personal finance is that you can always hit the reset button. So let's talk about a few simple, powerful ways you can regain control starting right now. A fantastic place to start is the 50-30-20 rule. It's so simple, and that's why it works. You just allocate 50% of your take-home pay to your essential needs, like housing. Then 30% goes to your wants, like hobbies and going out. And this is the important part, a non-negotiable 20% goes straight to savings and paying down debt. Now, to fight back against those psychological triggers we talked about, here are 5 super concrete tactics. Simple things like making a list or unsubscribing from marketing emails can make a huge difference. But my favorite one on this list is the 24-hour rule. Forcing yourself to wait just one day before buying something non-essential gives your rational brain a chance to catch up with that emotional impulse. It works wonders. So when you boil it all down, it really comes back to this one final question you have to ask yourself. And look, this isn't about feeling guilty or never buying a coffee ever again. It's just about being intentional. It's about understanding the true long-term cost of your choices. So take a hard look at your own habits. Are they building the future you actually want, or are they quietly costing you one?